Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/RIVE to receive the top 10 stocks to buy right now. Rivian is still a relatively young company, both on public markets and in real life, only producing about 25,000 vehicles last year. But it's already running into a number of challenges that may be bigger than it can overcome as a standalone company. Production isn't ramping as quickly as anybody would hope. Like I said, 25,000 vehicles last year, expecting about 50,000 this year. That's not enough to be profitable as a standalone company. At the same time, competitors like Tesla are starting to reduce prices for their vehicles, putting pricing pressure. More competition is coming into the market, particularly with the highly successful Ford F-150 Lightning and a Chevy electric truck coming to the market soon. Legacy automakers across the industry are starting to build more EVs, providing more pricing pressure, more competitive pressure. And none of this is to say anything about the macro environment with higher interest rates, potentially a recession on the horizon that could just crater the auto market overall. So given these challenges, does it make sense for Rivian to be a public company, or is selling itself to somebody else a viable alternative? I think this is something that investors need to think more and more about right now. So that's what I'm going to dig into today. My name is Travis Hoium. Thank you for watching RIVN Investing. Please subscribe here on YouTube for all of my content, particularly on emerging companies like Rivian. I want to start here with a baseline of what Rivian is worth today. This is Monday morning, March 27th, and Rivian's market cap today is $12.6 billion. Why is that important? At the end of the last quarter, if we go back to their earnings report, they had about $12 billion in cash and equivalents on the balance sheet. Now, before we consider the amount of money that they're investing in capital expenditures and operating expenses, because they are a negative cash flow company, it is notable that Rivian's only trading for about the cash that it has on the balance sheet. So from an acquisition standpoint, if one of the legacy automakers were to acquire Rivian, they don't really have to finance this kind of a purchase because they're buying a whole bunch of cash. Now, I want to look at this from two angles. From Rivian's standpoint, why would you sell? We found out recently that Rivian was looking to raise debt because it wanted to have more cash on the balance sheet to build out both its second factory in Georgia, as well as get operations in its Normal, Illinois facility up to scale, which they're clearly not going to do in 2023. That's going to take time, meaning that a lot of cash is going to be burned in the meantime. They just want to have a little bit more cushion there. They could have more. So that leaves a lot of uncertainty for the company if they have $12 billion in cash now, but they burn $8 billion in, say, the next 12 to 24 months. That doesn't leave much cushion when the company starts to ramp operations over the next few years. It's a little bit of a precarious position if you're Rivian. I also mentioned the competitive pressures. We know that the F-150 Lightning has been very successful for Ford. Chevy and General Motors overall is also investing heavily in building out its EV capabilities, saying that they're going to produce 1 million electric vehicles as early as 2025. So that's not far away, and Rivian isn't going to reach scale at that point. Now, we also know that Tesla is starting to reduce prices because they have so much supply that demand doesn't match their old pricing structure. So they had to reduce prices. That puts further pricing pressure on the industry overall, even though Tesla isn't competing yet in the pickup truck or SUV market in the same way that Rivian is. So there's a lot of uncertainty for Rivian. And if you're either management or shareholders, you have to think about what is the potential upside and the chance that we get to that point where we're generating value versus potentially selling now to a bigger automaker. That turns to the second question: who would like to buy Rivian and what would they be buying? And I think this is where there's a really compelling option for a number of legacy automakers. Rivian does have a very good brand. It is starting to ramp production. And like I mentioned before, you get that cash on the balance sheet. So the net purchase price would only be, as of today, any premium that you paid above that $12 billion number, plus anything that they burned in the meantime. So let's look at a couple of options. I think these are the four companies that make the most sense: General Motors, Ford, Toyota, and Honda. What I did here was I pulled cash from operations, the cash that they've been generating from operations over the last 12 months. You can see that every single one of these companies is generating enough cash to fund the losses that Rivian is generating right now. Those losses won't go on forever, but I think that's notable given the cash that you're acquiring and then the cash that they're already generating from the business. The two that I think are the most interesting here are Toyota and Honda, because they don't really have a big electric vehicle business. and they in particular don't have an EV truck or SUV business. So they could acquire Rivian and immediately become a leader in both electric vehicles and trucks and SUVs. That could be a really good position to be in as they're trying to fight companies like Ford and General Motors in the electric vehicle space. Those two companies are the other ones to watch. Ford obviously has its own electric truck, but it has been lagging in producing electric vehicles, hasn't made quite the same commitment that a company like General Motors has. GM could be a potential buyer. They have the cash flow and the balance sheet to acquire a company like Rivian. The question would be, do they want to do that and invest in the Rivian brand as opposed to sticking with the Chevy and GMC brands? Kind of a similar challenge that Ford would have. I think this actually makes the most sense in a company like Toyota or Honda. But any of these four companies could be getting a relatively good deal buying Rivian and relatively low risk. The worst case scenario is that you get the brand and the manufacturing facilities that Rivian is building in the US, and you're able to leverage your own expertise in the process. I think Rivian is in a really unique position here. They have a lot of question marks going forward. This could be a company that you could be very bullish on, but there's a huge risk that they aren't able to execute and aren't able to build a profitable, sustainable business. The best alternative may actually be selling before it's too late. We've seen a number of companies do this that came public via SPAC or IPO in the last few years. And given the cash and the market cap that Rivian is trading at right now, that could be the best alternative. But what do you think? Would you be excited if Rivian was bought by one of these legacy automakers? Let me know your thoughts in the comments section below. Don't forget to subscribe to RIVN Investing here on YouTube. Thank you for watching, everyone. I'll see you here next time.